Hello traders, welcome back to the channel. This is Vishal and you're watching weekly sectoral analysis. Now this particular educational video is going to be extremely crucial and very important because market is trading at a crucial juncture, and what all money you have made in the last few months, especially in this bull run, in this uptrend since November, you need to safeguard it. I'll tell you why and what is the reason behind it. If you just have a look at the daily time frame, just the price, no indicators, nothing at all, you'll find out that post this particular correction, which did occur in 15 Jan 2024, this was the first correction. Then the market did try to go higher. Again, it found resistance at 22,115 or something. And again, it came down, and once more, it's trying to go higher. So what is the reason why markets are finding resistance in this zone? So that is what we need to first understand. And the answer will come from the higher time frame chart, that is a weekly time frame. In the weekly time frame chart, you can see that there is a trend line which is holding on since 18th of October 2021. And post that, it has been tested 3 more times. The first time, 15 Jan, again it tested on 29 Jan, and then recently on 19th Feb. So it's a trend line that has been holding since 2021. It has been tested almost 4 times now, and near that particular trend line resistance, which is at 22,280 or 22,300 for round figure, there is one more Fibonacci resistance which comes at approx, you can say, 22,460 or 450. So the entire band between 22,280 to 22,450 or 460, this entire band is a stiff and strong resistance for the markets. Now, are the markets overbought? The answer is very much yes. You can clearly see the way markets have gone up. All right. Now, as a trader, what needs to be done? What we need to understand is, I'm not trying to say that market is going for a toss and suddenly we'll start correcting, or probably the bull run is over, something like that. No, it can happen that market slowly and steadily, penetrates this particular resistance, then it penetrates this one and then goes higher. Or maybe this trend line will be penetrated, it will go and test the 22,450 mark and then it will take a U-turn. We don't know what's going to happen. But I know one thing for sure, as per my experience, when markets are in a zone of strong resistance, not a weak resistance, trading is going to be difficult. It's like, especially when the markets are near this higher end, you need to be very careful, especially positional traders. If you are initiating any trades, you need to be very careful, because in positional trading, you need a lot of room on the upside for the markets to move, for that stock to move, for that particular sectoral index to move. Okay. And we don't have much space left here. Once we surpass 22,450, again, we'll have a lot of space. So I'm not saying to stop trading completely, but if you're initiating trades, be open-minded, be vigilant, and with a pinch of salt, you need to understand that maybe if markets are going to take a U-turn and if this resistance is not going to be taken off, your trades will go for a toss. Now, one more thing, in this sort of scenario, even swing traders need to be very careful, because swing traders also do have their positions open from 1 week to 1 month. So it's not completely intraday or something like that. So even swing traders, even positional traders can continue to trade, but you need to be very careful. And if you're, especially if you're holding any trade where you are in the money, I mean, where you are in profit, a very big profit, it makes sense to book partial profits 101%. Okay. Rest, you can continue to hold with a trading stop loss, right? Let's have a look at the Bank Nifty. Now, in the Bank Nifty chart, what I can see is, if you can see that the banking pack is trying to go higher. First, we have a hammer. Before a hammer, over here, we have an inverted hammer. Again, we have an inverted hammer. So basically, Bank Nifty is just chopping up and down between, you can say, 44,000, 44,400 thereabouts. And on the upside, 47,343. And there is still a upside gap, which will be filled at 48,000. So far, it's still difficult to gauge, to understand what Bank Nifty is trying to do. But what I can understand from this price movement is that Bank Nifty is just consolidating. It's just going sideways, and it's going to be difficult to make money over here until and unless there is not a proper trend either on the upside or on the downside. Now, PSU Banking Pack. PSU Banking Pack, I can say one thing, that the trend continues to remain up, okay? And even in the weekly time frame chart, the trend is up, but the weekly RSI is at 81. Even in the daily time frame charts, we are near a resistance. This resistance is not very, very strong as per my analysis, but yes, I do acknowledge that it is near a resistance. Some sort of consolidation, maybe a little bit of profit booking may happen, especially in this stock, SBI. SBI has gone up very, very fast in the recent few weeks, and the trend will continue to remain up, but some sort of consolidation or profit booking, if it happens in this stock, I'll not be surprised, and it is required. All right, so if you are a person who have initiated positional trade in this stock, it makes sense to book partial profits. Private Banking Pack. Now, Private Banking Pack, again, we can clearly see that there was an initial correction, then a pullback, then a fall, and then we had a sort of lower lows and higher lows in RSI, and there was a decent pullback. Now, after this pullback, there is still some sort of consolidation happening over here. After this consolidation, whatever happens will be interesting to see. But if you just have a look at the HDFC Bank, which is the the main stock in the Private Banking Pack, it is not ready to go higher, because this particular resistance over here, 1450 or 1460, it's not allowing this particular stock to go higher. Also, if you have a look at the weekly time frame chart, we have a hammer, then we have inverted hammer. So it looks that the stock is confused where it wants to go. And I would suggest that as a trader who's only trying to initiate bullish trade, it makes sense to just to stay away from the stock. And looking at other stocks also, only ICICI Bank is one stock which has been sharing its bullish nature trend. If you have a look at the Axis Bank, even Axis Bank is trying to come out of its consolidation, but so far it is not that much confident to come out. If you have a look at Kotak Mahindra Bank is also weak. So the three main pillars of Private Banking Pack, which is HDFC Bank, Kotak Bank, and ICICI Bank, only one is looking strong. The other two are still weak. So till the time these two stocks, HDFC and Kotak Bank, they're not ready to go higher, the Private Banking Pack will continue to suffer, with ICICI Bank obviously playing the role of supporting that particular index. Now, if you have a look at the energy pack, we can say that the trend and momentum are not in sync. The reason is the trend is extremely strong. RSI being overstretched from almost this level, from 75, you can see the prices are still continuing. So this is the classical nature of the benefit of doing trend following, when even if the readings of an oscillator continue to remain overstretched, the prices will continue to go higher. But this is too much overstretched, and in the daily time frame chart, there is some sort of negative divergence. So yes, if the energy pack corrects on the downside, and if it is available at a better rate, at a rate where the risk reward ratio for the bulls is better, then yes, as a swing trader, I would like to be interested, and I will surely have a look at these stocks. Metal pack. Now, metal pack is one sector which is very, very strange. The reason is we have a higher high in metal pack over here. We have a lower high in RSI. It is emphasizing negative divergence in the price. Plus, if you check, this particular candle did sense that there is some sort of resistance over here. Despite all of that, in the daily time frame chart, the prices are trying to go higher. So as a swing trader, yes, there are maybe a couple of stocks in this sector in metal pack which are ready to go higher, but you need to be very, very careful while initiating trades, because not all the stocks are ready to go higher in the stock. Especially this stock, Hindalco, played a spoil sport in this particular sector by crashing down. Okay. Autopack. Now, Autopack continues to remain strong, continues to go higher. Yes, it is overstretched, but still in a strong uptrend. If you remember, I had shared one stock, which was Maruti, probably when the stock was somewhere over here for a positional pick, and stock has rallied on the upside. Whoever did analysis from at your own end, and you are reaping the benefits of this of your own personal analysis, then probably it's time to book partial profits in this particular stock. Finance Pack. Finance Pack looks a lot like Bank Nifty, still consolidating, is going up and down. So as of now, I have no view on this particular sector. We'll wait and watch. Consumption Pack. Consumption Pack, I guess the trend is up. There is no sign of negativity as of now in the daily time frame chart. So selected stocks in the Consumption Pack in the short term, as a short-term momentum trader, may continue to go higher, but you need to be very, very careful again which stock you're picking. In the FMCG pack, what is evident is that the sector has corrected in the daily time frame chart. It is now trading at a support and it's trying to give a pullback. Now, how long this pullback continues is a big question. Is this a complete bottom out, or it is just a pullback and then again we'll have a follow-through selling? It's very difficult to say. So it's completely wait and watch. If it surpasses some important level, then only I'll be able to speak something into it. So as of now, it's wait and watch. But one stock is looking interesting, which I also shared in the last week, which I'll again share right now, is Nestle. And you can see the stock is bouncing from a trend line support, and a lot more things are visible in the stock, but the trend line support is playing the main thing over here. And if it gives a breakout in the daily time frame chart, then yes, as a positional trader, it will be a good pick. But again, please put in your own analysis. Don't go on my words. Please select your own levels. Please select your own stop loss and only then go for it. But yes, this is one stock in the FMCG pack, which is looking better than other stocks as of now. Infra Pack. Infra Pack, we can say that trend is up in the weekly and in the daily time frame charts as well. The trend is up, but the momentum is waning. So yes, if you're a trader who is holding any stock from lower levels, you can continue to hold them with a trailing stop loss. But as a swing trader, you need a certain amount of correction in this particular sector to re-enter the stocks. ITPac. ITPac has done pretty well for itself from the moment it broke out from here in the daily time frame charts. Now, what is happening is after this gap up, there was a sudden sell-off and now there is some sort of consolidation. Now, if at the same time you have a look at the weekly time frame chart, the trend is up, but we are nearing a important resistance. Now, this is not a sign of a top. This is not a sign of a top, but this resistance is coexisting near this all-time high resistance also. So yes, IT is finding little bit tough to surpass on the upside. Like it went up, again it came down, again it went up, again it came down, again it's trying to go higher. So it's trying to do its best to surpass the resistance, but it's not able to do it very, very effectively. But this particular stock, Infosys, especially in the early time frame chart, it's looking pretty nice. And the main reason is it is trying to bounce. No, sorry, it's trying to bounce basically from, I'll just redraw it for you. From this small trend line support. And also, if you just have a look at this range, multiple times the price has been able to bounce back from here, multiple, at least 3 times. Now the 4th time, there is also a trend line. So this particular level has not been tested. So if there's a breakout in the early time frame charts in the stock Infosys, and if it is able to surpass this high, then maybe I guess the ITPac will try to go higher because it is the king of the ITPac stocks. Now, pharma has done very well for itself by rallying on the upside, but I can say one thing, the weekly RSI is at 85. As a positional trader, if you're holding any stock, you can continue to hold them without any fear or with a trailing stop loss. As a swing trader, would not be interested at this level, at this juncture. It needs to correct further down, and then only once the risk reward ratio is favorable for the bulls, then I would like to re-enter, not otherwise. PSE sector, I can say that the weekly time frame chart is looking extremely overstretched, and the trend and the momentum are not in sync, and similar thing is visible in the daily time frame charts, because you can see a formation sort of a double top or something like that. Not exactly, but it will be completed once it is broken this, but this is only for the short term. But despite all these things, there is one stock which is pale. This stock is looking pretty strong. So once we have a break probably above this level properly with about 235, 260, then there is a decent possibility it might rise on the upside. Realty Pack. Realty Pack looks strong, but you can clearly see that the momentum is waning in the weekly time frame charts as well. So not a very good time to initiate new trades in the Realty Pack. But if you're holding any older trades in the sector, you can continue to hold them with a trailing stop loss. Midcaps. Midcaps, again, you can say that there is a sign of waning momentum in the weekly time frame charts. You need to be a little bit careful. And if you're holding stocks from extreme lower levels, booking partial profits would not be wrong. But yes, as a swing trader, if this sector corrects and then if it starts to bounce, then maybe swing traders can surely participate. But your stock picking should be very accurate. Now, coming back to Nifty and summing it up all, I guess this is not a time to initiate too many trades. This is not a time where you will have a lot of good trades in the market. So it makes sense to book partial profits wherever you are deep in the money. I mean, you're making extremely high profits. Again, I'm not saying that this is a top, but we are at a very strong resistance. So if you're initiating new trades, be very careful with a pinch of salt and be open to the markets that anything can happen as of now. Trade less, trade wisely. Take care, guys.